Patrik, markets like a relief rally, don't they? They like a relief rally and they like a can kick, and that's usually what causes it. Does it really matter, as Guy said, what happens from here so long as this passes? If the Greek people suffer, it's a tragedy. But for the markets, they don't look at that tragic consequence. They just want this hurdle jumped over and to move on.
Yeah. I think one of the headlines I read this morning is hope has broken out across Europe yet again. So,
also?
you know, I think, well, possibly. I think that kind of sums it up quite neatly. Exactly. Markets will trade this very short term. A deal is good news and no deal is bad news. I think the story might have been a little bit different a couple of days ago, but markets have now been rallying for a couple of days on the growing hopes for a deal. So, you know, I think markets would react quite negatively if it doesn't come off. And to be honest, while I hear everything that Hans is saying,
yeah,
I must say, if there's a semi-serious offer, and this does look pretty serious from the Greeks, and, you know, the mind boggles about the domestic politics.
Yeah, of course.
But who understands domestic politics? But if there is a pretty credible, serious offer there, I think Germany will find it pretty hard to not at least give it another shot, one final shot, perhaps.
Here's a question for you, Valentin. The experience of the last 6 months with the Syriza government, the experience of the financial crisis here in Europe of the last 5-6 years, we really going to have a deal without someone coming out in the next 48 hours and saying, no, 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 it's not that simple, it's not that straightforward?
Well, I think that, the big confusion comes on the back of that referendum. So effectively the fact that...
What was it about?
Well, that's the point. Like a week after the referendum, they came up with the same proposal that was voted down. And if anything, I guess part of the story has to do with Tsipras' attempt to, I guess, manage a situation whereby it's close to impossible for them to impose any conditions on the creditors. But at the same time, for him, as a politician, he was trying to survive. And again, I'm not trying to decipher the Greek domestic politics,
no.
but the only logical explanation was really that Tsipras went for the vote and ultimately came out victorious to the referendum, effectively strengthening his position inside the party. It's quite telling that shortly after the referendum, Tsipras asked Varoufakis to leave. I mean, Varoufakis never resigned. He actually asked to leave. And if anything, from that point of view, I guess, going into that Greek vote today in the parliament, I think chances are that there will be defectors. I mean, Syriza has a lot of factions that are quite extreme. Their nationalist like coalition partners, the 17 seats in the parliament that they still need to pass that vote, actually apparently did not sign the proposal. But if anything, I guess the referendum played a role to unite Syriza. Effectively, they know that the people on their side, they did their best, right? They try not to cross their lines, but the creditors and the conditions are such, and they want to stay in the euro. So under these conditions, they were forced to kind of assign that. So from that point of view, I think Syriza and Tsipras may actually survive that, and they may have to deal with the creditors down the road.
They might, but at this point, we can't get knee-deep in the politics without talking about the financial system, Patrik. And at this point, when you look at capital controls, the experience of Iceland, the experience of Cyprus, you don't just wake up Monday morning with a deal, if indeed we do have one, and unwind capital controls. How long is that financial system going to be tied up for now?
I don't think anybody knows, but there will certainly have to be some bridge financing for Greece agreed. I mean, you know, make no mistake, even if we come away from Sunday and there is an agreement, this will take time to go through the German parliament. And let's not forget there are other parliaments in Europe as well. You know, there's Finland, there's Slovakia. You know, everyone focuses on Germany, but it's far from the only show out there. So there will have to be some bridge financing agreed, and none of this is done. So there's a lot of possibilities for this to screw up in the meantime.
Valentin, just very quickly, to your world, to the world of FX, a relief rally on the euro crosses, a stronger euro. Euro-dollar, that relief rally, will that last? And against the safe havens of the Swissy and right here, sterling, is that unwind actually here to stay now?
I think the biggest beneficiary of all that will be the dollar. If anything, if you look at the June minutes, right, of the Fed, right, the two biggest concerns were Greece and indeed China. And fingers crossed, we'll get some resolution over the weekend, so that's one risk down. Obviously, the Chinese stock rally, you may be right, it may be the case that we only have buyers because all the sellers are actually either investigated or being investigated or whatever, banned from trading. But chances are that will encourage the Fed. So effectively, they they could embrace the idea of hiking rates sooner rather than later more closely. We have Yellen next week, Humphrey Hogan's testimony. I think that could be quite indicative of that rates will be going up in the US fairly soon. So from that point of view, any relief rather in euro-dollar, by implication cable or indeed dollar Swiss lower is a fate. We think that the dollar will emerge victorious. So we actually think that euro-dollar lower, cable lower, potentially dollar Swiss higher could be the trade on the back of that. Needless to say, dollar-yen has been moving already a whole day, like in the morning. The fact is, however, that yen being the ultimate safe haven could lose further ground. Obviously, that depends on the deal being reached over the weekend, which is still our central case.
That's the FX market. To the bond market, of course, plenty of hurdles ahead till Sunday night. At the moment, though, spreads much, much tighter. Italy versus Germany, we're at 125 basis points. We were at 160 just the other week. Where is this heading now at 125? We're not going back to 88 back in March, April time, are we?
Now, I think the common thread that both China and Greece have written all over them is confidence. You know, confidence has been damaged in Europe. Confidence has been damaged in the Chinese system. You know, I think last time I was on here, I did say that, you know, the bad luck that the Greeks had was that the ECB was actually standing ready and containing contagion, as it were.
No leverage.
And that's certainly been, you know, a problem that we've had over the last couple of days, to actually attribute the moves in risk assets to, well, is it more worries about China, is it more worry about Greece? Because you look at the other indicators, well, spreads are contained, the euro didn't really react all that much, so it's actually been quite hard to sort of attribute the shifts in risk appetite between those two sort of crises that are bubbling away.